Good morning, this is Luc. I'm going to start this weekly review of the Enigma system. Welcome everyone. So I'll switch right away to the screens. I hope you all can see my screen. So we're going to talk about the Enigma system and see what we did for the last couple of weeks. So as we all know, it's a 100% systematic program. It's unbiased. In other words, it's market agnostic. It doesn't try to predict, and it's fully transparent. Now, with regard to the philosophy and trading strategy, we've covered that multiple times. I'll skip over that. We know that we are using different trading engines, different time frames and trade direction, and that the key issue with regard to Enigma is how to manage the risk, and that's actually where we focus on most of all. We use different metrics to determine our model performance, and we can use different leverage and different trade size. Of course, we compare our performance to the S&P 500 because that's the market that we are trading. Now, there are many reasons to invest in Enigma, but I think one of the most compelling one is the fact that it's really a true diversifier. Correlation is next to or near zero at all times. And it's really exceptional that we see anything like common performance as the S&P is doing. If the S&P is having a great month, it doesn't mean we are having a great month. But fortunately, when the S&P is having a bad month, usually we have a great month. Nevertheless, let's skip right away to the more important features, which are, of course, the performance. So we know the performance has been really good. 28% for the last several years, more than 7 years now, in real-time trading. We have an intraday version and we have an end-of-day version. Both of them have their own advantages and disadvantages, but the main feature is that it's a great program for hedging purposes, and that's why the long and the short version of it is extremely appreciated by our investors. Now, with regard to the trade size and the leverage, we've covered that before, but it's important to indicate and stress once again that actually the more aggressive you trade the program, the Sharpe ratio actually starts to increase even further. So it's a really good relationship between the CAGR, compound annualized geometric return, and on the other hand, standard deviation. So the resulting Sharpe ratio is quite nice and starts to increase even with more aggressive trade sizing. Now, with regard to the return of the program, we've started, of course, the alerts back in May 2022, so that's slightly over 1 year, and we have a pretty strong performance, very comparable to what we see in our managed accounts, in our certificates, and in our funds that we have been trading since January 2015. Now, on the alert service, we see this is actually taken from the website of Aeromir. So these are the numbers that we have been able to verify. It's the end result of all trades taken, all trade messages sent out after slippage. So it's a pretty decent image of what can be achieved when you start to implement the program. So we see that over the whole period, the return boils down to about 25%, slightly over that, 27.72 as of the end of June, which is after 13 months of trading. Important to mention is, of course, the drawdown, which has not exceeded 15%, which is, by the way, our key feature. We focus on drawdown control, and we try not to exceed the 15% drawdown. It can happen occasionally, of course, but the sizing of the portfolio is made in such a way that we try to avoid that. Now, if you look at this in a more graphic form, we see that correlation is truly absent. You see the market going down, Enigma going up, and vice versa. Sometimes the market is going up and we're flat or slightly up. Sometimes the market is going up, like here, and we are rather flat or slightly up. So it really varies. Correlation, as I said earlier, is really virtually inexistent, so close to zero. If you look at the trade alerts that we have been issuing for the last couple of weeks, actually in the month of June and the first week of July, we see that we only had 12 trades, which is truly low, a very low figure, which basically means that the program is sitting on the same position for several days, if not weeks, occasionally. And we see that if we start the end of the month of May with a flat position, we had first a trade which says buy one to go flat. This was actually what happened there. And then we went gradually into a position which resulted in more and more exposure, which at one point in time was as big as +3, or actually +3 trades, I mean, so the net exposure was something like +2. But intraday, we could be as big as +4, even +6 during exceptional circumstances. But so what we see most of the time is that when we have these kind of trades, building positions from 0 to 1, from 1 to -2. So in other words, on the 21st of June, as you can see here, we sold 2 contracts. And so we went from a position of flat to +2. And then actually we went back to a 0 position. And then on the 23rd, actually we went from flat to 0. And you see this graphically in the next slide. So we see that we started the month flat in June. We went up to 1 contract, stayed with that 1 position, increased it to 2, then actually went back to flat about around the 21st of June. Then actually went short for a brief period in time, then went back up, back short, back long, and since what is this? We see it here, since July 6, we're actually short. So at the end of June, we had a long position of 2 contracts, and that actually resulted in a change in position from net long to net short a couple of days later, which was this week. So we had very few trades. As you may recall, on average, we have something like 2 to 10 trades a week. I think it's indicated right here. You see, it's selective, low frequency trading with, on average, maybe 1 trade a day, say 5 trades per week. However, this time, as you can see, we only had 9 position changes, and which were the result of 12 trades. So that's really a very low maintenance trading program. And how is that possible? Well, it's due to the fact that the market has been trending quite a bit. And if we go to the charts, we can see, for example, that right here on the slightly longer term, we see that the market has been in a great up move till around mid-June. From around June 19, we started a drawdown. The market went down and we actually went short. We abandoned the long position. And then actually for a brief point in time, brief moment, we went back long again. And then on July 6, we actually reversed to net short, which is in line with what we showed here. So we see that it was long from early June all the way till June 21st, when we went flat and then actually went to a negative position, went back to a positive position, back to a short position, back to a long position, and then reversed finally. So several position changes, but not too many. Why? Because, as I said, the market has been trending quite strongly, which usually means that we're not going to change the positions too often. If you look at a shorter time frame, for example, this one, we can see that it has been indeed quite volatile. This is like going back to June 21st during this downdraft. And then the market has this strong up move during a couple of days at the end of the month, especially on the last day of the month, we have that. And then on the 3rd of June, which actually was like more or less half a day, we saw some hesitation. And on the 5th of July, I'm sorry, we saw this down move again. We tried to recover a bit yesterday, but it failed. Around just after lunch, the market reversed completely. And after an up move of more than 1% or 40 points, we actually revisited the 44.76 level. As you can see here, we traded back down towards the 44.40. And so that's really the area of support which we have seen. many weeks now. And so once we crossed this barrier, this orange line, we saw that the market was in for a serious up move, but then it couldn't hold it, and this resistance level around 4,500 turned out to be quite strong. So that's basically what I've got with regard to the activity of the last couple of weeks and month, I should say. So what we can do now is try to go back to the slideshow and just checking if there are any questions. Okay, question here I see. What would September 21st to April 23rd have looked like? Okay, I see September 21st to April 22nd. Let's see. So basically, we had a very strong serious drawdown, which started around mid-October. And that was really pretty heavy, about nearly 15%. Then we recovered all the time. September 2021 to April 22. Okay, I'm sorry. Let me just see. I think I have some numbers here. So if I look at the performance of our funds to September 21, it's right here. So we have these kind of months. So a flat month in September, a negative October, and then a very good end of the year in November and December in 21. Then 22, of course, was an incredible year. We had 33% return, but the first 4 months were all positive. So about 3% per month, actually 2 or 3 and 2 or 4%. And we only had one losing month actually in 22, which was this pretty heavy November month, minus 8.5. Have a good weekend, you too. Bye-bye now.